Hey everyone, welcome back. Hope everyone's doing well. Let us quickly discuss the price action of Nifty yesterday on 14th of August. We had a very small range yesterday. The market remained within a range of about 75 points here. Usually the average range of Nifty is around 200 to 250 points. Yesterday was quite an unusual day, very small trading range day. No clear breakout up, no clear swings up, or no clear swings down. This was clearly a limit order market. It was very difficult. It was very difficult for stop order traders to be able to make money on a day like this. They had to be very selective. They had very few trades. And the ones they did take, they had to get out with a small scalp. This is bad for stop order traders. Let us understand how could we have traded a day like this and still be able to make money out of it. Let me take you to the higher time frame charts. Before the market opened, what was I expecting? Let us start with the daily time frame chart here of Nifty. I want to show you one concept here. Hear me out. We have been in this weak bear leg since almost 30th of June here. If you look at this wedge bottom here, we had a wedge bottom on 21st of July. Usually after a wedge bottom, the market goes for two legs up, which we did here. We went up, we went down, we went up, and then we had a low to short. The bulls attempted to reverse the market twice and they failed. That is known as low to. And this low to was at the daily EMA. And look what happened next. We broke out below this wedge bottom. A similar situation happened here. We had a one push, pullback, second push, pullback, and the third push here. And after this wedge bottom, again, the concept was the same. The market usually goes up for minimum two legs. We went up, we went down here, we went up again, and we had a low to short again here. The bulls attempted to reverse the market twice, and they failed. And the bears have a good bear reversal bar here. But the problem with this bear reversal bar, why did we not break out below this wedge bottom here, like we did here? The problem was this low to short was not at the daily EMA. And look at all the bars to the left. There are so many bars, so many bull bars closing near their highs. Look at this bar here, this bar too, this bar, this bar. Almost four bars are closing near their highs. Big bull bars closing near the highs. This was a very low probability short. This bar here, low to short here, was forcing the traders to sell too low in a possible trading range. So I was not expecting sellers until we approach the daily EMA or we approach this bear channel high. We have a spike, pullback, and a channel. And usually, a spike and a channel usually transitions into a trading range and approaches a bear channel high. So I was not expecting sellers yesterday. I was expecting the market to either be a bull trend day or either be a trading range day. It was very unusual, very unlikely to have another big bear trend day. I was expecting buyers below the low of any of the prior bars. So going into the day, I was expecting the market to either be in a trading range or have a bull trend day. Now let's see what happened yesterday. Yesterday, before we opened here, we opened somewhere flat. But if you look at the price action of Wednesday, we were stuck in this trading range here. And the market opened flat within this range. And look at the first three bars here. We have a II pattern here. And all of the first three bars have tails. Look at bar 1, bar 2, bar 3. All have prominent tails at the high and the bottom of the bar. Also, the first three bars were an II pattern. II pattern is nothing but a trading range on a smaller time frame. So the first three bars itself was an indication that the market was either going to remain as a trading range day or at minimum going to have a trading range open. So once you know after the first three bars that the market is minimum going to have a trading range open, all you have to do is get into the scalp mode. Buy low, sell high, scalp. That's it. Buy low, sell high, and scalp. And in trading range, all you have to do is bet on reversal patterns. Any reversal pattern you see, you bet on it, and you will be able to make money out of it. Let me explain you. We went up, we went down, we went up. This was a low to short here. Again, if you see overall, we had a wedge top here. and we reverse down. You see here, there was a wedge bottom here. But the problem, why did we not reverse up here? The problem was, yes, the market was very sideways. If you see, there were so many tails and dojis here. The market was clearly sideways, but it was also making higher lows and higher highs. There was a high low here, higher low here, higher low here. And usually in a trading range, the market goes below support before it finds buyers or goes above resistance here before it finds sellers. This was a minor lower high here. The market was expected to go below the low of this prior low before it finds buyers, which is what it did here. It was not able to reverse the market here, and we broke below here, the swing low. The bears had two consecutive bear bars closing near the lows. However, we're still in this overall trading range. In fact, if you just consider the day low here, this was a bar one low. This bar did not even close below the low of bar one. All that bears needed is one more bear bar here. But since this is just trading range behavior, all you have to do is bet on a reversal. And in fact, we had a lower low double bottom here, a reversal, another reversal pattern, sell climax, low low double bottom. This was more likely going to be an exhaustion gap rather than a measuring gap. And look what happened. We reversed back up. Another reversal pattern here. We have a wedge top here. You can say there was a lower high double top as well. And we reversed down. This too, another double top here. We reversed down. This too, we went down, we went up, we went down, we went up. A high too short, but a very big bar, a very big tail at the bottom of the bar and the high of the bar. Not a great stop order trade. Again, we reversed up. We reversed up on 64 and 65. We pulled back, and this was a strong bull breakout bar here, two bars here, but it was still within this overall trading range. And this was more likely going to be a second leg bull trap rather than a strong bull breakout and continuation up. And then we reversed up. All you have to do on a day like this is bet on reversal patterns and look for more limit order trades rather than stop order trades. You can also see we had one triangle pattern here. Let me mark it for you. One push, two push, three push with bar 15, 22, and 26, as well as this here. You can just mark it like that. Too many lines on the chart, which is another indication that the market is just in a trading range. All you have to do is wait for two legs up before you look to sell, or maybe three legs up. Wait for a reversal pattern, take that. Wait for a reversal pattern, we fell here. There was a double bottom here, bet on that. We have a double top here, bet on that. Double top here, sell. Double top here, sell. Low double bottom, or you can say there was a wedge bottom with bar 1, bar 31, and bar 64. One push, two push, three push, bet on a reversal, and we reversed up here. So, what were the good stop order trades on a day like this? There was nothing at the beginning of the day. However, bar 6, bar 7 was a good low to short. Yes, there's a bull bar and a weak sell signal bar, but usually in a trading range, even weak sell signal bars work. The bulls were expecting buyers below the low of the bar, and what would disappoint them was a big sell off here, which is what happened. And disappointment is what happens in a trading range. So a good low to short below bar 7. That was a good stop order trade here. Bar 32, a double bottom with bar 1 low. Bar 46, wedge top, lower high double top. Reasonable to take that short here. You could not, I do not see any good sell signal bar here to take a stop order trade. This was, yes, a bear bar, lower high double top here, but this bar did not even close below the midpoint of below its midpoint. So I did not take that short. Not reasonable to sell below the low of a sell signal bar which did not even close below its midpoint. At minimum, like this bull bar here. This is a bull bar and it's a weak sell signal bar, but it did close below its midpoint and it did make this bar as a bear reversal bar. You could take that sell, but selling below this low with such a prominent tail at the bottom of the bar, not the best thing to do. Best stop here, bar 46, reasonable to take that short here. Bar 68, reasonable to sell below the low of bar 68. For a low to short, higher high double top with bar 56 and a possible second leg bull trap in this overall trading range. Very difficult uh, to make money out of the trades which I just mentioned right now. This was not a good stop order market. This was more of a limit order market. So all you had to do is focus on limit order trades more. Let me explain to you. When the market is in this overall trading range, all you have to do is you see any big bull bar near the top of the trading range, you sell that. And if you see any big bear bar near the bottom of the trading range, you buy that. You see a big bull bar near the top, you sell. Big bull bar near the top, sell. Big bull bar near the top, sell. Yeah, big bull bar near the top of the range, sell. Year two, you can sell that. Big bear bar near the bottom, even bar 30, bar 31, you could sell, you could buy that. This IA pattern, weak low and short, right near the bottom of this range, you could buy that. We broke out here, we did pullback, this is a high one, and we did pullback, and this is a high two. This is a weak high two, big tail at the top of the bar, bar 21. You could sell on a limit order above the high of this bar. Weak high two sell signal right near the top of the trading range. This is a triangle buy setup, but this too near the top of the trading range, weak buy setup, sell. Do the opposite. Buy below the prior lows. Like we broke below this prior low, you could buy that. We broke below bar one low, you could buy that. We broke above this higher prior high, you could sell that. We broke above this prior high, you could sell that. You buy below any of the prior low, you would have made money near the bottom half of the range. What I generally do on a day like this, I divide the entire day's range into three parts. Yeah, this is a top one third of the range, and this is a bottom one third. I look to sell near the top one third, and I look to buy near the bottom one third. You could sell below this, you could sell this weak high one, you could sell this triangle buy, and you could sell this big bull bars closing near the high. You could sell this weak high one, you could sell this bull bar closing near the top one third, and you could buy the same. You would do the opposite here. Buy this, buy the breakout below this prior low, breakout below this prior low, breakout below this prior low. Do any of that, use a wide stop loss, and you would have been able to make money. So yeah, quite an unusual day, very small range day. If you were a limit order trader, you would have been able to make money, but that was still a lot of work to make very few points. No great swing up or down. What do I expect on Monday? Again, the daily chart, we are still in a weak bear leg and we are still far away from the daily EMA. I do not expect the sellers to come at least until we approach that high. Approach the daily EMA. Also, in this weak bear channel, this is the first highest bull close. So I don't think the seller should come before we approach this high. What is the close of this? 24,821. So I'm expecting the market on Monday to either be a trading range day or have another bull trend day, rally at minimum until the daily EMA, which is around 24,740, or at least until this bull close, 24,821. And if we continue to keep going up, we might even approach this bear channel high, which is 24,956. So I see a lot of room to the upside rather than to the downside. So this is the range. If within this range, if you open flat around this low, or if we break below this prior low, prior day's low, I will be looking to buy. I will be betting on a reversal here. If we open gap up or if we do open flat and if we break out above, I will be looking to buy. If we start getting consecutive bull bars, if we break out of this entire range, if we get a couple of bull closes above this entire range, above the previous day high, I will be looking to buy. I will be looking to buy until we approach the daily EMA, which is around 24,740 or above this bull close. First bull close in this bear channel. So I will be looking to buy. If we continue to keep going up over the daily EMA, I will continue to swing my longs all the way till 24,820. And if we continue to go up above that, we might even approach 24,956. I'm not expecting sellers to come in before that. It is also possible that the market might just approach this daily EMA by just being sideways. If we just keep being sideways, the daily EMA get will continue to keep getting down, and by that we might in that way we might also test the daily EMA and then continue the bear leg down. So yeah, on Monday I will be having a little bullish bias. If we open flat or if we open a slight gap down, I will be looking to buy. If we continue to break out above the prior high, if we open flat, if we open gap up, and if we break out above this prior high, I will be looking to buy. We have a lot of room to the upside. At least at minimum, I will be targeting 24,740. But if we do open a big gap down, I will be looking to take a shot only if we do open a big gap down be, below all of this ring range price action. I want the market, if I want a big bear trend day on Monday, I want the market to open a big gap down and I want the market to continue the sell off. Give me big bear bars closing near the lows. Only then I will be able to, only then I will be looking to swing my shots. That's it. Thanks everyone for watching and best of luck for Monday. Hope you all have a good weekend. Thank you.